Fertilizer prices have seen an unprecedented rise recently. Why and what's sending the price up? And also, of course, how can we benefit from this interest in these markets? We're talking now to Brian McMaster. He's executive chairman of Harvest Minerals, the AIM-listed fertilizer company. Brian, thanks indeed for your time. I'm massively interested in this market, and of course, a lot of other people have now become more interested in it. Now, at Harvest, you've just produced first quarter sales data, and it sticks out by a mile because of the sheer size of the numbers we're talking about. Accumulated sales orders up 689%. What's going on?
Yes, good morning, Jeremy. Thank you for your time. I think, for Harvest in particular, there's two very specific things that are happening. One is the business as a business is starting to get some real traction with its customers, and just generally our product is becoming more popular with the customer base in Brazil. But more to that, we've had a massive shot of steroids really caused by the global fertilizer markets. They've been trending up for quite some time, but the issues in the Ukraine and with Russia have caused a massive squeeze on fertilizer supply, and that's a consequence. People are accelerating their decision to come and visit us and have a look at our product.
So, assuming that the Ukraine crisis gets resolved sooner rather than later, and have to say, let's hope it does from a humanitarian point of view, but from a fertilizer point of view, assuming it does get settled, do you then see the next lot of sales data dip by a massive margin?
Yeah, we don't think so, for a couple of reasons. And one is the way our business has been growing is that customers have been coming and buying a relatively small or modest quantity of fertilizer, trying it for themselves. When they find out that they like it, they've been coming back. Our return rate is sort of, circa 100%. So they've been coming back almost, every man has been returning saying, well, I now want more. So we've been seeing a natural progression and growth already. In addition to that, the macro environment in Brazil is very different. So Brazil is one of the largest consumers of fertilizers on the planet, and it imports almost everything. The government has been saying for quite a long time that it's been trying to get off the importation bandwagon and looking to become more self-sustaining. And the issues that we're seeing now in a macro environment, all they've done is really increase and accelerate the local drive or the domestic drive within Brazil to buy local and to be more independent. So even if this were all to reverse tomorrow, we would expect to see that our customers who love our product will continue to come back in droves, and would expect to see them buying solidly because we tick so many of the boxes that haven't been ticked today. And they include things such as price, we're 100% organic, and most importantly, we produce locally, and we alleviate all these concerns that farmers have around supply issues.
Yeah, okay, well, let's pick up on that point about producing locally. You mentioned Brazil. You're listed in London, of course. Harvest Minerals are listed in London. I know you're based there in Sydney. So explain more about what you're doing at Harvest and how you're able to capture this market. Is your market just dedicated purely to Brazil?
Yeah, it is. It's we're 100% Brazil. In fact, we're 100% very localized. Within a 300-kilometre radius of our mine, the market for a fertilizer product is huge. So even at full capacity, we'd only be a 1-digit percentage point of the overall market. So we're just a very small contributor to that market. So we don't have to look very far to find customers, and we don't have to look very far to sort of sell out, so to speak. And by that I mean reach capacity. And so we've more recently we've been looking everywhere for a long time. The product we have is quite unique. So more recently we've found a couple of other projects which are in different geographic locations within Brazil, and we're looking to expand operations by going to different geographic spots. But again, it will be the same type of business. It will be a localized business just for the local farmers. It turns out to be it's a very good place to be. I mean, Brazil is a country of over 200 million people. Agriculture is a major contributor to its economy. I think it might actually be the single largest driver of GDP at the moment. So, we're a captive market selling something that they want to buy.
Yeah. Before we get into more deeper discussion about these new projects and so forth, I want to return to these numbers and ask you the question as to how Harvest, which, as you say, is a relatively small company, bearing in mind the sheer size of the market you're selling into, How the heck did you cope with this sort of rise in demand all of a sudden? Because the Ukraine crisis was something which developed so quickly.
Yeah, I think so. I mean, we'd forecasted at the end of last year that we'd hope to sell 150,000 tonnes this year. And the way those sales traditionally are achieved is a bell curve. So we have a very slow start to the year, building up to a rump around the northern summer, and then a slow taper to the year. Now what we're seeing because of other events is that there's a flattening of that curve, and we're getting increased and sustained demand throughout the year. But the plus side for us is our operations are incredibly simple. I mean, we have no beneficiation at all. So all we really do is free dig the ore, put it through a light crushing plant, and then we either put it in bags or trucks and sell it. So for us to process is not that hard.
Let me just quickly follow up, if I can, on this idea of that expanding into other areas, because in amongst the notes that I'm looking at here, you've got development, as you've been saying, in other assets in Brazil, 2 potash projects, because we've been talking initially about fertilizer, haven't we? So you've got 2 potash projects in the pipeline, a limestone and phosphate interest. Just explain more about the market and how this is all subdivided up into these different areas, because the KP Fertil is just a fertilizer, isn't it? It's not potash as such.
Yeah, so KP Fertil, when we first found the resource and first started to work through all the agronomic tests and all that kind of stuff and seek accreditation, it was given the title of what they call a remineralizer. And a remineralizer is not a fertilizer, it's something of a lesser standard. And lime, for example, would be a remineralizer. So and by that it says, well, it adds minerals to the soil, but it doesn't necessarily fertilise the plants. We went on to produce further economic studies and work further with the government in Brazil to say, well, actually, we think KP Fertil is something more than just a remineralizer. And recently, just last month, we got given our fertilizer accreditation. So we are technically a fertilizer, which is a major step forward for us. But in that broad market of fertilizers / remineralizers, there is a whole scale of different inputs that the farmers need. And we tend to focus on one end of that market, which is, unashamedly sort of the not negotiable from a farmer perspective. I mean, the way the farming works in Brazil is because of the amount of rainfall they have. Lots of nutrients get washed away on a regular basis, and the pH levels of the soil, they do have to remineralise and balance the soils every year. So we're down where at the end of the market it requires very little beneficiation, a low cost, a low per tonne sales rate, but decent volumes, create a business. At the very other end of that spectrum is a full potash mine. And at the moment, and for a long time now, Brazil has only had one fully operational potash mine, which is coming to an end. It's publicly said that its life of mine is expiring quite rapidly. And we happen to own a deposit which is about 20 kilometres or 30 kilometres down dip from that mine. So, we do have operations which are at the bottom end of the spectrum, if you'd like to call it that, and we also have operations that are at the top end of the spectrum. And at the moment we're focusing on the things that we can bring to market really cheaply and efficiently, and we're just trying to generate cash.
Yeah, let me, as I said, you're listed in London. Let me bring up a share price chart just so we can further analyse what's happening here at the moment. Currently trading, 15.6 on the market. Just explain more about what's been happening. Of course, we've got this uplift on the far right-hand side of the chart because of what's been happening, as we've been explaining at the top of the interview. Where do you see things going from here? On the basis that you don't see demand pulling back and your idea that you are now beginning to expand your offering, what are you saying to investors? And I know you're an investor yourself. I think you've got more than 3% of the company, haven't you? So clearly you've got an interest in this. What's the message to investors?
Well, I think the message to investors is, if you look at that chart, it's pretty interesting. So we raised money a few years ago. We're at 21, 22p, and we raised money at 18.5p. We've never been back to the market since. Those cold, dark days where we were down, I think we went as low as 1.9 or something like that, were really it was really difficult for us to understand why we ended up that low, but we did. And we've been clawing our way back just by doing what we said we're going to do. So, when we raised the money at 18.5p, we promised the market that we'd do a whole bunch of things. Now we're almost at 18.5p, and we've done all the things that we promised we'd do. So, we had a price that was built on expectations, and now those expectations are reality. So I think, if you like the stock at 18.5p a few years ago, you should love it now. And as for the future, I mean, we are now rapidly entering into a territory where we should be benchmarked against our peers based on a percentage of earnings. And I think, the nearest competitor to us, who is listed in Canada, I think is currently on a 17 times earnings. And if sort of extrapolate that out, we are extremely undervalued.
Does that mean you're going to get taken over? That's the next question, of course. If you're that much of an attractive proposition and you've got some really big players in this market that are looking for expansion, I guess their acquisitive nature would start to be piqued. Do you see yourself in the crosshairs of other companies?
Well, you never know, right? I mean, there'd be lots of reasons why you would want to buy Harvest if you're in that sort of market. I mean, we don't have a huge market cap based, there's a real disconnect between our value on the market and what the business would be valued as a standalone business. I mean, a massive disconnect, and it wouldn't take a genius to work that out. But we do have a core of really solid shareholders who have been with the business from day one and who do love the business. So if a takeover were to be presented, I don't think we'd be throwing down the gate bridge and letting them come in just willy-nilly.
Yeah. No, I understand. Of course, as management board, you have to consider these things, and of course, you look at it in the light of shareholder value and so forth. Let's just steer the conversation back to the company, where you're going, what you're doing, and what the rest of 2022 looks like. What are you messaging at the moment?
Well, we're messaging, I think, two key things, and one is that the business is accelerating a bit faster than we anticipated it would, but it's still within the boundaries of overall expectation for the year. So we're not panicking. We don't have any issues about delivery. We don't have any issues about coping with the increased sales or any of that kind of stuff. We hear feedback from investors that they're worried about pricing. Now, we don't disclose our pricing for commercial reasons, but we are obviously very aware of how prices are fluctuating, and we are adjusting our prices to reflect the market, which is obviously a positive. And we think the rest of the year will be extremely, extremely solid. And as I said at the outset, I think we would expect that solid performance will roll on. We've got a mine life of over 100 years. And, it's a little bit of one of those things where we've found to date that when people get our product and use it, they like it, and they keep coming back. So we think now that we're into a territory where we're creating a perpetual business, which will year in, year out produce, profit and dividends.
Sounds like a good business model to me. Brian, we'll have to leave it there, but thanks for joining us on the line there late in the evening in Sydney. That's Brian McMaster, Executive Chairman of Harvest Minerals. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.